Okay, Monday, 16th of September, 2024. So, Adrian's daily vlog, sharing smart stuff men should know. Money, Monday, Bitcoin, and the other stuff. Be aware of the status quo bias in the market. Now, there's an interesting cognitive bias called the status quo, meaning things as they are. Status quo bias says we think that things as they are will continue into the future. If the market is going sideways or going downwards or going upwards, we assume, we think as the standard as it is in that moment, we assume, we think, we feel, we want, we desire it to continue that way. If we think it will continue that way, we assume it will always be this way. Famously, in the 1920s, people believed that the stock market would go up forever. That's a heck of a bias. Imagine that, 100 years of a bull market. Now, this is something that can shake a lot of people at the market. Okay, right now, the market is very sideways. A lot of people are getting itchy and antsy about it. Well, why is it going like this? It's going to be like this forever, forever, forever. And drawing wrong conclusions, coming to the wrong ideas, misunderstanding, not reading the tea leaves correctly, in a way, correctly, and coming to emotional decisions and actions and impulses. It's shaking out the tourists because it's so boring, so sideways, which is a great buying opportunity, great accumulation period. It depends what you're buying, of course. But the thing is, if you understand the fundamentals of the market, there's that quote, price is what you pay, value is what you get. When you understand the fundamentals of what you're buying, in this case, what you're buying, then the price it doesn't matter. Premium, discount, fair value. It's immaterial. We want to get a good company at the right price, a discount as opposed to a premium up here. Then when we are that logical in the market, everything else is just noise. If the market is bouncing around here and there, this and that and that and this, it's just noise. Okay, come back in a week, come back in a month, come back next week, next Tuesday, whenever. All this is noise. It's about overcoming that noise and getting down to the signal, which is the value. Price is what you pay, value is what you get. What are you buying? And that's an infinite question because there's many things to consider. But also, understand fundamentally that things as they are will not continue like this forever. The bull markets in the 1920s, 80s, and 2010s did not continue forever. The Great Depression, early 1930s, or Great Financial Crisis, GFC, the global financial crisis, 2008, 9, 10, didn't continue forever. So it's all in our head. The market can do whatever it wants, up, down, left, right, who knows, left, right, center, whatever. It's about keeping cool. It's about being logical, more logical than emotional. I did a video about this. Separating logic from emotions when making decisions, very important. That way you can cut through straight to the signal, meaning this asset's on discount. That's powerful. Same thing, nothing's changed, but the price has changed. It's gone down, therefore it's on discount. All things being equal, it's on sale. And not letting letting ourselves panic because of the situation here. No. Very important. So then you could say, could look at the markets now and think, well, you might think Bitcoin is going to go sideways forever. Because right now it's sideways market. It's going to go sideways forever. It's boring. All the tourists are leaving. Okay. Will it go sideways forever? Of course it won't. History. 6 months from now, 12 months from now, 10 years from now, it's going to be a complete different situation. The sideways chopping market today is immaterial. It's immaterial in the future. 10 years from now, this will be a few months, a few bars on this chart. Today it's immaterial. It's such a small time frame, and it's such a, on the grand scheme of things, it's going sideways. It's going, nothing's happening. Bias, status quo bias kicking in. Just in the same way, people in the 1920s thought the market was going to go up forever. The exact same bias. These dull moments in the market are good times to get ready and prepare, mentally and otherwise. These moments where nothing's happening, There's no real big news, no real big developments happening. Oh, just focus on this. Focus on the business. Focus on this. Focus on this. Focus on this. Focus on yourself. Again, price is what you pay, value is what you get. If the price is bouncing around here and you're going to get asset here, premium, discount, amazing. Now, also years ago, when I was doing for a short while binary trading, I remember looking at the charts, and there was these Bollinger Bands, this metric that you can use in technical analysis. And as the market went sideways, or increasingly got less volatility, went sideways more and more, the Bollinger Bands tightened. And I knew from experience that was like wine. It was like pushing a beach ball down from the water, from the surface of the water. That market's getting tighter and tighter in this range here. It's moving up and down, and then eventually, what's going to happen? You look at other metrics, of course. The price skyrocket went in one direction. It skyrockets. Now that means that status quo has changed. The situation as it is has changed. Why? Because now suddenly the market's going that way or that way. So that sideways is temporary. It's a short-lived moment. It's a chance. It's opportunity. Opportunity for what? Well, you tell me. Get ready, at least. So I noticed that in these moments where the market goes sideways and crabs, and trades in a range, and a tighter range at that, by looking at other metrics in the technical analysis, we can then get a stronger idea where the upside will be, in a sense of where the moment that the trend breaks and just goes one way or another. I saw this on the small charts and the 10-second charts, the 30-second charts, the minute charts, in binary options and forex, and it's in the micro world. It's exactly the same thing in the macro world, the bigger picture, the daily chart, the weekly chart, the monthly chart. It's exactly the same there, just on a bigger, you could say bigger scale. I suspect so. Yeah, I suspect so. So that when you've been in the markets long enough, you see and you notice patterns, behavior, humans, incentives, price action, news. I was told years ago, and when I was learning forex as well, just under 10 years ago actually, November 2014. No, wait, was it 14? 15, 16? Anyway, they said that when something is in the news, the money's already been made. That means then the news is on the 1st of July, the news headlines, such and such reaches new all-time high. Wow. That means the past 6 months, people were behind the scenes arranging and preparing their trades, their positions, buying and preparing the liquidity, margin calls, everything else, all the behind the scenes stuff. Then the market moves. When the market moves, the headlines are made. Headlines appear. People have made their money. That's powerful. That's powerful. So that's why this time right now is a great chance. These sideways, these boring markets, where nothing exciting is happening, that's the moment to be prepared. That's the moment to prepare. Why? Because something's going to happen in the future. Who knows when? 6, 12, 18, 24 months from now, something big is going to happen. 5 years from now, something big is going to happen, which will look today's price action down here, just a little bit, sideways action, completely different, completely irrelevant. Oh, just a footnote in history. It'll be for the future traders and analysts and whoever else and historians to analyze and break down and look at that period. That period there was the calm before the storm. All the tourists were leaving thinking it's boring, and then suddenly, boom, powerful stuff. So what matters is the fundamentals and what you're buying. Price is what you pay, value is what you get. So long as the underlying asset is the same, then the price is all just human action. The price, understand, if the value of the asset is the same, nothing's changed with the asset, it's important, and the price action is all over the place, that shows humans really, human sentiment, emotions, the what's happening in the world, the buyers, the sellers, the short sellers, the options traders, you name it, this market sentiment, the futures market, liquidity problems, you name it, money printing and beyond. That's just the human side. And if the value is the same, the asset is the same, yet again, if the price is doing this, then that means it's on discount, on sale, on selling at a premium. Oh, fair value. Oh, exactly. So fundamentally, a sideways market, a boring market, is an opportunity. If the asset is the same and opportunity to grow here, heart, mind, soul, in some way, to grow, to be a wiser, better, faster, stronger, more powerful person than before. Compound effect, a little bit every day, a little bit better, a little bit better every day, a little better. So it takes logic and focus to have a good time in the market. Yeah, meaning, well, okay, it takes logic and focus. That's important, and time spent in the market is more important than trying to time the market. Interesting. That's a whole other conversation. But be aware of the status quo bias. Things don't stay the same forever. Yeah. But otherwise, Adrian's Daily Vlog, sharing smart stuff men should know. Subscribe for more. You will see me tomorrow.